Welcome, and today we're going to hear from Commerce Commission and RBNZ on their thoughts on banking in New Zealand and the effects of the capital market. As we know, New Zealand is currently heavily impacted by Australian-owned banks, Westpac, ASB, ANZ, and BNZ, with smaller banks like Kiwibank wanting to become bigger. As the banking industry, there is currently a change wanting to happen into more of a competitive market, and brought forward is the Commerce Commission that has proposed the idea to do so. And on that note, representing the Commerce Commission, Tanvir and Tamishka.
So, in relation to capital regulation, smaller banks indeed experience greater capital costs compared to the big four Australian banks. In spite of the capital requirements being low for smaller banks, the Commerce Commission believes that the structure is rather disproportionate, as it's like 16% for the smaller banks and 18% for the big four. Therefore, this strictly constrains smaller banks' competitiveness in comparison to the Australian banks. Also, the Commerce Commission is uncertain about the higher capital requirements being undoubtedly a positive factor to reinforce the bank's safety in terms of the claims made by the RBNZ. The Commerce Commission suggests that with the lower capital requirements, competitiveness would be encouraged without compromising with the bank's safety standards even.
Right, so how do regulators impact the banking market then?
So regulators play an important role in controlling the market competition. So by implementing regulatory policies can promote better competition within the industry. The RBNZ is enforcing a new insurance deposit scheme next year, which will increase consumer confidence in the banking industry as consumers will gain more trust in the financial system. However, with the insurance deposit scheme, banks can incur more additional costs, which could be a disadvantage for the smaller banks as higher capital requirements reduce their ability to compete within the market.
Yes, and policies that focus on encouraging greater access to capital for smaller banks by reducing dividend payments or by issuing subordinate debt can increase their capital funding and therefore increase their market position. Furthermore, smaller banks are able to provide more consumers with better competing interest rates for their deposits and loans by attracting more consumers from larger banks and therefore increasing their competitiveness within the market.
Okay, so what about the fintech solutions then? How can technology help the banking market?
So, fintech solutions have an opportunity to change the market. For example, open banking is an innovative way to really disrupt the banking market in New Zealand. It can decrease the barriers to entry for smaller New Zealand-owned banks, and it allows customers to switch banks more efficiently, as well as engage in more multi-banking activities. So, by introducing open banking activities within New Zealand is required to increase their transparency and disclosure of information to the public to encourage more consumer-driven activities from the banks.
Well, thank you for sharing your thoughts. And representing RBNZ, we have Joey and Helena. And to start us right off, with you guys, RBNZ, what are the challenges that you see that might prevent smaller banks from competing effectively in the market?
Well, we agree with the Commerce Commission that there are challenges to fair competition in banking. Major banks have big advantages, making it hard for smaller ones to compete. Consumers tend to stick with big banks as well because of their attractive offers. Also, fintech companies do struggle with regulations and getting funding.
However, we disagree with the Commerce Commission's analysis on prudential capital. Our current framework balances competition while maintaining financial stability. The Commission suggests lowering capital requirements for smaller banks to enhance competition, but we believe the risk to stabilizing the banking system. Our capital levels ensure consumers fund safety and compliance with international standards, crucial for confidence in New Zealand's financial system.
Right, so what would RBNZ's plan to maintain the financial stability while addressing these concerns be with limited competition?
The RBNZ values both financial stability and competition in banking. We ensure prudential capital requirements support stability while exploring ways to promote competition, like facilitating capital access for smaller banks.
Regarding the deposit insurance premiums, we recognize that smaller banks have higher insurance fees due to perceived riskiness. However, deposit insurance is essential for protecting depositors and maintaining confidence in the banking system. While higher insurance premiums do pose challenges for smaller banks to compete with the major ones, it is crucial to safeguard consumer interest and prevent systemic risks in the banking sector. I believe that we need to team up to make banking fairer for everyone, benefiting both consumers and the economy. Thank you.
Well, thank you so much, both RBNZ and Commerce Commission, for coming in today, and have a lovely day.